VAT. We're looking at VAT. And the first thing on VAT is to define what is VAT, definition of the term VAT, which means value added tax, isn't it? VAT means value added tax. But now, in other words, what is VAT? Value added tax. So if a layman wants to understand it more, can you explain it further? Just than defining it, just initials. But what does it mean really? What is VAT? What does it mean? What is VAT? It is which kind of tax? Nani ashasikia VAT mzuri na naielewa kidogo tu juu sio sana. Ile unaielewa juu tu kidogo sio sana. So VAT is tax on spending. It is tax on which is collected by businesses and passed on to the government. So it is when you spend on an item that is vatable is when you pay VAT. So it is indirect tax that you pay on spending. So there are services and products that are vatable or they attract VAT. So if you consume those products, it is when you pay VAT. So VAT is tax on spending that is collected by businesses and passed on to the government, isn't it? Now, for the purposes of learning VAT, we are not interested with the person who pays VAT. Our point of interest is the agent who collects the VAT on behalf of the government. Those agents, the businesses that collect VAT on behalf of the government, that is our point of interest. Now, number one is you need to know what are the requirements for you to be an agent. What is it that if you attain, you need to register as an VAT agent? Or what qualification do you need to have for you to be a VAT agent? Or requirement for registration as an agent of VAT? That is number one. So registration requirement. Registration requirements. So number one, and which is important, is if in any given year you supply taxable goods or services whose value is 5 million and above in any given year, you're supposed to compulsory register as a VAT agent. If you supply taxable goods or services whose value is 5 million and above in any given year, you're supposed to register as an agent of VAT, compulsory. You don't need to wait to be followed upon so that you register. And number two, if you sell 4 or more motor vehicles in a year, you are supposed to register compulsory as an agent. Or you offer accountancy and bookkeeping services. You offer accountancy, auditing, and bookkeeping services, then you're supposed to register compulsory as an agent. You also offer legal and arbitration services. You are a lawyer and you registered your firm, you're supposed to register compulsory, isn't it? And there are so many other qualifications there, but the most important one is you expect to supply taxable goods or services whose value is 5 million and above in any given 1 year period. Then you're supposed to register compulsory as an agent of VAT. So we are interested with the people who collect the VAT on behalf of the government, and we call them agents. And for you to be an agent or to be a VAT person to collect it on behalf of the government, those are the qualifications. That is number one. And then you can also be deregistered when you had been registered. The registration occurs when the value of goods that you're supplying or services falls below 5 million in any given year. Then you're supposed to deregister. Or if you change the business name, you're supposed to apply for the registration and then reapply for registration again. If you die, some businesses that are owned by single individuals, if you die, then whoever is inheriting your business is supposed to apply for the registration, then apply afresh. You are incapacitated so that you cannot be able to run a business. You're supposed to apply for the registration. So you need to know who is supposed to qualify and who is not supposed to qualify. I have outlined them there. Then number three, you have obligations. Obligations of a registered person. If you're a registered person, you have some obligations. You have some obligations. Just a minute. So we can go systematically with the handout that I've given. So number one, there is the requirements that you need to fulfill in order for you to be registered as a VAT agent. We're saying the 6th schedule of the VAT Act requires that any person shall be registered compulsory for VAT if in the course of business has manufactured and supplied or expect to manufacture and supply taxable goods or has applied or expect to supply taxable services or both, the value of which is 5 million or in a period of 12 months. In other words, you're supplying taxable goods or services whose value is 5 million in a given year. So those are the qualifications. Then the registration we have written there. Then now you need to know the VAT records, those records that you need to have as an agent. Remember, we're looking at agents. We're looking at the persons who collect VAT on behalf of the government. Number one, the record that you need to keep copies of all invoices issued in serial number order. You need to keep all the invoices. You know what is an invoice? Eh? Who doesn't know what is an invoice? Who knows what is an invoice? Eh? What is an invoice? Who sends? Eh? Who? The seller sends to who? At what instances do we send an invoice? When do we send invoices? When goods are sold on credit, isn't it? Isn't it? Yes. So copies of all invoices issued in serial, and then copies of credit note and debit notes. So what is a credit note? A credit note and a debit note? When do you issue a debit note? When do you issue a debit note? Eh? When goods are returned? No. A debit note, when is it issued? So these are basic documents. These are basic documents that you need to be, you need to know them. They are when you go to, when you're employed, for example, you want employment as an accountant, isn't it? So your work is to solve problems. If you become a problem, they will not hire you. So they want somebody who can solve their problem, isn't it? Now, one of the problems that you're going to solve is to ensure that you know these documents. You file them and then you handle them the way they're supposed to be handled, isn't it? Now, if in the first instance they're asking you whether you know a debit note and you are coming, so you are being asked, do you know a debit note? You have very attractive CV and you have a degree, for example, you are CPA qualified, isn't it? And then you want a job. And then I ask you what is a debit note and an invoice, and you cannot be able to answer. What do you think? What do you expect now? What are you coming to do? You're going to show me your papers. You're going to show me attractive papers. So a debit note, when is it issued? When is a debit note issued? Or what is a debit note? To the debtors. When? He doesn't know. Anyone who can, we are here now. What is a debit note? These two have surrendered. It is your turn. Issued to? Yeah. To pay for the goods. No, a debit note is issued when you undercharge the customer. You can undercharge. This is an additional invoice, isn't it? So when you undercharge a customer, it doesn't mean that the customer will pay the undercharge. For example, you've agreed that the price will be 100 per unit. And then during the making of the invoice, you omit 10. So you invoice it at 10 shillings per unit, isn't it? So you see you have omitted how much? 90. Doesn't mean that the customer is going to pay on the 10 shillings. No, you're going to tell him, no, look, here we did an error. There was a 90 that was omitted. So when you make an error or you undercharge a customer because of any reasons, you issue an additional invoice. And then a credit note is issued when you overcharge a customer. You can overcharge a customer, maybe some of the goods that you had sold are being returned back. So the initial invoice is overcharged. So you need to issue a document that corrects that mistake. And that document is called, so a debit note and a credit note, they're very important. So you need to have a file of them very consistently. And then you need to have all purchases invoice, copies of custom entries, receipts for payment, custom duty, or tax paid, and credit and debit note received. So you need to have invoices, purchases invoices, copies of custom entries, and then details of amount of tax charged on each supply made or received. So those are the documents that you need to keep. Total of output tax and input tax, you're going to learn what it is. You need to have copies of those details of goods manufactured and delivered from the factory of the taxable person. So those are the documents that you need to have. But the most important ones are the invoices and the credit notes. And then now, if you're a registered person, you have some rights. We have rights of a registered person. We have rights of a registered person. If you're a registered person, you have a right, number one, to deduct VAT on inputs for taxable supplies. So the VAT that you are charged, if you buy goods, if you're a registered person, you buy goods that you sell, the VAT that you are charged is called the input. Input tax is the tax that you are charged when you buy the goods that you sell. That is called input tax. Output tax is the tax that you charge your customers when they come to buy goods from your place. So now if you're a registered person, you have a right to deduct input tax from output. You pay the surplus. If you pay the difference between output and input. So you have a right to deduct VAT on inputs from taxable supply. Number two, to get refunds. If your input tax always exceed your output, if your input tax always exceed your output tax, you have a right to be refunded. By who? The Commission of VAT. And then number three, to get a relief for stock in trade at the time of registration. If you're a newly registered trader, and you had some goods in your store, and you had been charged VAT on those goods before you were registered. So you have a right to reclaim relief for those goods in stock at the time of registration. And then to get a refund on VAT on bad dates. Bad dates is where you sell to a customer and the customer fails to pay. So the amount that is being held, of course, you have already paid VAT. So you have a right to be refunded on bad dates. And then to get a relief or refund on capital goods, including buildings acquired or put up within 12 months prior to the date of registration. And then you have a right, number six, free access to the commissioner or any other senior officers or manager if you have a genuine complaint on VAT. So you have a right to access the commissioner or any other senior persons who handles VAT when you have a genuine complaint. You have that right. And number seven, to defer payment to tax due to date, not later than 20th day of the month succeeding that in which tax is charged. So you can defer payment. You don't need necessarily to pay immediately until the 20th day of the day following the date of transaction. Then you also have a right to appeal to a VAT tribunal on any matter concerning tax. I have seen questions asking students to list or to explain the rights of a registered person. So you need to know that. Then a registered person has obligations. Obligation of a registered person. Obligation number one, you need to apply for registration as a taxable person if you qualify. You have an obligation to go and register. Unanielewa? Una obligations, ndio? Ama. Number two, to display the certificate of registration in a clearly visible place in the business premises. So once you've registered as a person, an agent, you need to come and display the certificate in a place where it can be visible within your business premises. If you don't do that, it's an offense. And then number three, to charge VAT on all supplies of taxable goods and services. So when you sell goods that are VATable or services, you need to charge VAT. That is your obligations. And number four, to issue a VAT tax invoice immediately after each supply, but in any case within 14 days of each supply. So you have that particular responsibility. And then to keep proper records and books. Number six, to file VAT returns on due dates. So to file a return is a form that you fill to show the VAT position, the VAT that you are charged, and the VAT that you charged. That is a return. And then to pay monthly tax due to the department according to the calculation of the monthly return. And number 8, to provide that VAT department officer with any information pertaining to business and allow the officer access business premises whenever required. So if there is any information on VAT that is required from you, you need to give it. So those are things you need to know. Then there is what we call tax point. It is what we call tax point. Tax point is the point when VAT is due and is due to be paid. This refers to the time when the supply is deemed to have taken place and VAT becomes due. This is the point when the VAT becomes due. In other words, you need to account for it, to pay for it. So when does it become due? So it becomes due at the earlier of whatever happens earlier of the following. The goods or services are supplied to the purchaser. When the goods are supplied earlier of the following. Goods are supplied, number 1. Number 2, an invoice is issued. Number 3, payment is received. Certificate is issued by the architect. When you are a surveyor or any person in supervisory capacity in the respect of the services. So mostly these 3. You see, you can receive goods. You can receive goods, isn't it? And the invoice follows later, and the payment will follow later, isn't it? Or you can receive payments and the goods are not yet supplied, or an invoice is not yet issued, isn't it? For example, you are selling these chairs that we have here. You are the seller, isn't it? So someone wants the chair that we are sitting on here. And then he tells you, let me make payments. He just make payments in May. But you will supply the goods you will issue the invoice in when? In June. So this payment has been done in May. Invoice is issued in June, invoice. And then the supply is done in August. This is when you deliver the goods, delivery. So when do you account for VAT? The earlier of this, which is May. So either of this can happen, whichever happens earlier, that is when you account for VAT. Tuelewana? Ukishu invoice tu hivi, una account for VAT. Whether ukilipwa, una account for VAT. Whichever happens earlier of the 3 things is when you account for VAT. That is called tax point. And then there is what we call tax invoice. Whenever a taxable person supplies taxable goods or services, he must furnish the purchaser with a tax invoice within 14 days of the completion of the supply. Information contained in the tax invoice: name, addresses, and VAT registration number of the person making the supply, the serial number and date of the invoice, the date of supply if different from the above. So those are the details that are there on the tax invoice. So those are some of the basic information that you need to know. So now we want to learn how to account for VAT now itself. Those are the basic informations. Those are the basic informations. And then we have now classification of VAT. Supplies may be categorized as taxable supply, exempt supplies. So we can classify VAT as either taxable or exempt. So VAT can be either classified as taxable or exempt. Taxable means they attract VAT. So taxable supplies include standard rated, that is those items that attract VAT at 16%, and zero rated supplies. So zero rated and standard rated, and then we have the fuel and oil is 8%. So standard rated supplies are supplies on which VAT is charged at the rate of 16%. However, the rate on fuel is 8%. So we are saying standard rated includes the normal rate, which is 16%, the zero rated, and the fuel and oil, which is 8%. So those ones fall under the standard rate. Zero rated are supplies for which no tax is charged. However, in all respect are treated as taxable supplies. The value of zero rated supply is taken into consideration in computation of the turnover required for a person to be registered for VAT. Taxable person supplying only zero-rated goods or services is entitled to a refund on the input tax suffered. So zero rating refers to the following: goods or taxable services that are exported. So when you export goods, those goods are zero rated. If you are an export, you can't charge VAT on the export. So one of the zero rated supplies is exported goods or services. Those are zero rated. And then we have supplies to designated foreign aided funded capital investment bodies. But the most important one, that when it comes to zero rated, there are two things: exports and water supplied by local authorities. Hizo maji inasuppliwa na kanzo, hiyo iko zero rated. Hizo mbili, exports na water supplied by local authorities, and then supplied to EPZ enterprises. I hope we are together. So we are saying we have classification of VAT. VAT is classified into two: either taxable or exempt. Standard taxable is categorized. It has three rates. It has zero rated, 16%, and 8%. Zero rated refers to exports and water from local authorities. Exempt supplies of goods and services which are not subject to tax. These are goods and services. If you supply them, you are not supposed to register even as a VAT agent. A person who makes only exempt supplies will not be regarded as making taxable supply, and the value of the exempt supply will not be included in the calculation of the turnover required for registration. A supplier of exempt goods or services cannot obtain registration for VAT. Tax suffered by a person cannot be claimed as input tax. Exempt supply refers to, we have a list of exempted items and services. We have mosquito nets, for example, material used to prepare the cleaning dairy apparatus. So we had around 12 items there. So we have 12 items there. We have 12 items there. So before we look at the deductible input tax, let us understand what we mean by VAT. How do you account for VAT? How to account for VAT? So VAT is accounted for. We have what we call output, VAT payable, refundable, VAT payable stroke refundable. VAT payable stroke refundable is equals to so we're looking at account for VAT. So we're saying VAT payable refundable is equals to output tax minus input tax. That is how you account for VAT. So when do you pay VAT? After you've determined the amount that you are paying, you are supposed to pay by the 20th day of the month following the month of transaction. So we can go there for account for VAT. The VAT paid on expenditure should be accounted for as input tax, while VAT charged on supply of goods and services should be accounted as output tax. Tumeelewana? So output tax is the tax that you charge your customers. Input tax is the tax that you are charged when you buy the goods that you sell and some services. Are we together? Output tax is the tax that you charge your customers. Input tax is the tax that you are charged when you buy the goods that you sell, including some services like electricity and stationery, those services those are the goods that you pay. How and when to account for VAT? The amount of VAT payable to the Commission of VAT is equal to output tax minus input tax. The VAT is payable on or by 20th day of the month after the month of transaction. If this is March, so the transaction that occurred in the month of March, by 20th of April, we ought to have accounted for VAT. If by 20th day falls on the weekend or public holiday, VAT is payable on the last working or business day of the week before 20th. VAT is charged on each transaction in the production and distribution chain. Now we have an illustration. We want to use this illustration to demonstrate how VAT works. Illustration: a manufacturer purchased raw materials worth 1 million, on which VAT is levied at the rate of 16% at each stage in the production and distribution chain. Conversion cost was incurred at 25%, and 30% markup included to determine the selling price. So required, calculate the total VAT collected by the government along the distribution chain. So here we have how to account for VAT. So there is raw material, there is raw materials whose value is 1 million. Whose value is 1 million. And then the VAT rate is 16%. And then conversion cost or value addition is 25. Markup or the profit is 30. Now, number one is the supplier of the raw material. This is the person, supplier of the raw material, assuming that he qualifies to be a VAT agent, isn't it? So he will supply raw materials, shillings and thousand here. He will supply what? Raw materials. 1 million. This 1 million, according to him, the supplier, is sufficient to cover for his cost and the profit. So when you give him 1 million, he's satisfied. He has the profit and he has the cost, isn't it? So he only requires one, but the government tells him, please add for us 16%. So the VAT will be how much? At 16%. So VAT will be how much? 160. So this is the VAT. So whoever comes to buy from him will pay 1,160. So here atapatia government pesa ngapi? 160. Si ni kweli? Sasa nani anakuja kununua kwa supplier? Anaitwa nani? Manufacturer. Manufacturer. The manufacturer is aware that this 160 has been charged for VAT, isn't it? So here is the cost of goods without VAT, cost of raw material. Cost of raw material here. The cost of raw material will be how much to him? 1 million, isn't it? Then value addition, conversion cost or value addition. Conversion cost at 25%, which is 200. So the total cost to him is 1,200, isn't it? The material and the conversion cost. That is the value addition. And then he also needs profits. He adds what? Markup. Markup for how much? 30% of that one, how much? 30% of 1250. Three. So the selling price to him will be how much? So 1625. This is the price he requires and he is satisfied. But the government was what? At 16%. VAT at 16% is how much? 260. So this one will be 260. So whoever is coming to buy from him, 18. So this VAT that is charged, this is called output tax, isn't it? This was the input tax, isn't it? So the VAT that is going to pay here, we less input tax. This is the output tax, 260. 260 is how much? This is the output. Input tax, the tax that it was charged, how much was it? 160. So yeye analipa ngapi? Sijui kama tunaelewana. Yeye amelipa ngapi? 100. Lakini si yeye amelipa, ule mwenye amekuja kununua kwake ndo amelipa. Ameforward mbele. Then now we come here to who? To wholesaler. We come to the wholesaler here. So the cost of goods without VAT, ananunua ngapi? 16.25, isn't it? And then now value addition at 25%. Value addition could include what is the value addition for wholesaler? Value addition will include transport, maybe the storage. Yeah. So 25% of that one is how much? 106. 46.25. So this is the total cost. Eh? 2030.25. And then now you add what? Markup. Markup at 30%. Markup is a profit on cost price. So you add there. How much do you get? 609. 609.6? 375. So you get here the selling price. Selling price will be how much? 26? 605. 625. Then you add VAT. VAT at 16%. For 22.5. So this is going to be the Huh? 3063.125, isn't it? And then you add what? So this is the VAT. This is the VAT, this is the selling price. So this is the output VAT, which is 422 point. You less the input tax. Input tax was how much? 200, so you less 260. So it's going to pay how much? $162. So 162.5. Now it goes to who? Retailer. So the cost of goods, which is 26.62, value addition. Value addition at 25. 25% of that one is how much? 360. 660. 165. 56. This is 56. So this is the cost. This is the total cost. Nakuja ngapi? 3,300. 78. 1. And then you add there the markup. Markup at 30%, which is 990.23. And then now you get the selling price. Selling price ngapi? 42.015. Then you charge VAT at 16%. Nakuja ngapi? 66. 686.56. So the total huh? 49.77.5. So the this is the output tax 486.56. Then you less input tax. You less input tax. Input tax will be how much? 422.5. Nakuja ngapi? Huh? 364. 264. 264.06. So the total VAT paid. So here we have supplier. Supplier is paying how much? Supplier is paying 160. Manufacturer is paying how much? Is paying 100. Si ndio, si analipa hii. Si ni kweli? Aya, wholesaler 162. And then retailer 264 point total. This is the total amount from that. $686.5. So now the person who is consuming this product is the one that is paying 686.5. So the consumer is the one that pays VAT finally, isn't it? Because this one has passed on, he has paid 160, but he has charged the next person in line, isn't it? So the next person in line was charged 160, isn't it? But he reduced it. When the other person came, he charged him. So whoever now consumes the product finally is the one that pays VAT, isn't it? So these traders along the distribution chain, we call them agents of the government. So this one are the one that we're talking about on what they need for them to qualify to be agents. Suppliers can be agents, manufacturers can be agents, wholesalers can be agents, retailers can be agents, but not the consumer. Not the consumer will just, if you consume, you pay. So this is how VAT works in regard to one item. So we are assuming this one particular product. But if you're an agent and you're dealing with a variety of products, you deal with many products, how do you account for it? So I think you've understood how it moves, isn't it? Now, if you're a trader, you're dealing with many products, you open a VAT account. You open a VAT account. So if you're dealing with many products, not one, many of them. So if you're dealing with many products here, so you open a VAT account, it is maintained on monthly basis. So this is a VAT account. So this side, you're going to input tax. So you go to a debtor's account, you go to your creditor's account, you take VAT on credit sale purchases, VAT on credit purchases. You record here. You go to your cash book, you take VAT on cash purchases. You record here all the VAT that you're charged on cash purchases. You go to your cash book, you take VAT on imports. All the imported goods, you write here. You go to the cash book, you take VAT on services. On services, you record here. Are we together? And then here you record your output tax. You go to the debtors account, you take VAT on credit sales. You record here. All the VAT on credit sales will be obtained on the debtors account. So you go to the cash book, you obtain VAT on cash sales. All the cash sales you record here. And then we have what we call returns. So we have return inwards and return outwards. Return outwards is when you are returning goods to the suppliers. So you can write the opposite side, or if you write this side, you put it in bracket to ensure that you are deducting. So return outwards, you can write here, you add, and return inwards this side. Return inwards this side. Are we together? Now you compare this side and this. If this side is greater than this, that is called VAT payable. That is the balancing figure, VAT payable. The balancing figure. If this side will be the greater, this is VAT refundable. VAT refundable. Balance carried down or carried forward. And then these services. So we have some services that you cannot deduct input, you cannot claim input tax suffered. You see here we have services. So we have some services, if you incur cost of those services, you cannot claim VAT suffered. You need to write them, just write them down. You can just write them somewhere. A registered person, a registered person, a registered person, a registered person shall not deduct input tax if it relates to, a registered person shall not deduct input tax if it relates to, a registered person shall not deduct input tax if it relates to, one, entertainment expenses, entertainment expenses. Number two, restaurant and accommodation services. Restaurant and accommodation services. Catering expenses. And number three, acquisition of passenger car or minibuses. Acquisition of passenger car or minibuses. Acquisition of passenger car or minibuses, comma, maintenance and repair, maintenance and repairs, including the spare parts, So tumeelewana? So that is how it is. So now I want us to look at a question. May 2019. Tuangalie question ya VAT. Sasa tuangalie maswali. So we'll just be answering questions. May 2019. Question number. We start with May 20. Is it May 2019? Ngoja tuanze na tumesema okay, tuanze na November 2019. So we are looking November, sorry. CPA November 2019, question number 2C. Question number 2C. So swali nasoma hivi. So swali nasoma hivi. The following are summaries of the details of the sales day book, purchases day book, and cash book for Kamata Limited for the month of December 2018. So you have been given the sales day book, the purchases day book, and the cash book. Then you have been given the additional information. Number one, J. Kamau was declared bankrupt on 18 December 2018 after having paid 400,000 for the goods purchased on 7 December 2018. Number two, 10% of the purchases from Jawabu Enterprises were returned by the company due to poor quality. And number three, credit notes amounting to 280,000 were issued to customers during the months. Number four, refund to the customers in the cash book related to the excess amounts paid on cash sales. And number five, a purchase invoice of 220,000 from Dubai traders was omitted from the purchases day book. Number six, all the above transactions are exclusive of VAT at the standard rate of 16%. So required, prepare a VAT account for the month of December 2018 showing the VAT payable or refundable, if any. Total marks, 12 marks. Okay, so you know what is a sales day book, isn't it? So now when doing a question on VAT, the first thing you check the nature of the goods that the trader is handling. The nature, what do I mean by nature? If they are both a combination of both taxable and exempt. Taxable means they attract VAT, either 16%, 0%, or 8%. That is what it means by taxable. Exempt, they mean they don't attract VAT at all. So you check first, is there anywhere they have written exempt? So in this question, there's nowhere they have written exempt. So you become keen. You go through one by one. There's no exempt written anywhere, isn't it? So I'll show you how we handle questions where we have exempt and taxable. Taxable means they attract VAT. Exempt means there's no VAT. So now when they are taxable, you open a VAT account. So you come here and open the VAT account here. You open a VAT account. So you write the name of the trader. This one is called Kamata. What is Kamata? So you write here Kamata. Is it Kamata Traders? Kamata Limited, isn't it? Then you write here VAT account for the month of, is it December? December 2018. So you must, then you can write here shillings. And then here you write shillings. And then here you write here input tax. And then here you write output tax. So now you go according to dates, date by date. So sales day book is a book that we record credit sales only. Purchase day book is where we record credit purchases only. Cash book we record cash purchases and sales. So you'll be checking. You check in the day book, you check in the purchase day book, you check the day books and the cash book. So we check which one was the first. Like when I see there, the first transaction was December 1st. December 1st. So they purchased. So you write here 1st December. You write the date. So they purchased from who? Jawabu Enterprise. You write here Jawabu Enterprises. So they are exclusive. Exclusive means there's no VAT included in the figures provided. So you just take 16%. So it means they are 100%. So you find 16%. If they tell you they are inclusive, for example, they use the word inclusive and exclusive. So they say, if they say that the figures are inclusive and they have given you a figure like 16,000, then it means this figure is 100 and so you ask 16. If they say it's exclusive, the way they have said this one, then it means it's 100. So you find what? So this one is going to be 16 out of 100 times the value of purchases was how much? 300,000. Nakuja ngapi? So you write here 48,000. Hiyo ni ngumu kweli. Unaangalia date. So that is the first transaction on 1st December. And then you check the second one. I can see 2nd December in the cash book, salaries and wages. Salaries and wages do not attract VAT. So that one you omit. That is 2nd on the payment side of the cash book. And then after that, on 2nd, the next date is, I can see 4th, isn't it? 4th, we have sales, isn't it? So you write here 4th of December. So they sold to who? Mwangaza Limited. So it is 16 out of 100 times 650,000. How much is that one? 104. Like this. So, and then there is also the 4th, we have catering expenses. We said we cannot claim input tax on catering. So that one you omit. And then you check the next date. The next date is on 5th. 5th, we have purchases. They purchase the cash purchases, isn't it? So we have here, you write here 5th of December, cash book, isn't it? We have cash purchases, isn't it? You can just add the cash book, which is cash purchases, isn't it? So we have 16 over 100 times in brackets 580 plus 640. Nakuja ngapi? Sorry, hii ni purchases, ndio? Hatufai kuweka huku, si ni kweli? Tutafaa tuweke huku. So that is on 5th of December. So cash book, so it is 16 out of 100 times 580,000 plus 640,000. So that one gives you how much? 195, 200. And the same date, we have sales, cash sales, cash sales. So 16, so it's going to be 16 out of 100 times, in bracket, that is 960,000 plus 450,000. That one gives you how much? 25. 225. Tumeelewana? We are through with the date 5. We go to the next date. We are going date by date. 6, what happened? They purchased, isn't it? So you write here 6th of December. They purchased from who? Sony Tech Limited. How much? 16 out of 100 times 420. How much will that be? 67,200. That is on 6th. The next date after 6th, 7th, isn't it? 7th, aliuzia nani? Kamau, si ndio? He sold to Kamau. Kamau, how much? 16, 100 times 520,000. Nakuja ngapi? 50? 83,200. Si ndio? Next, furniture, isn't it? He purchased furniture. Is it furniture? On 7th December. Furniture, How much is it? 16 out of 100 times 160. How much is that? Huh? 25,600. Senor. Next. Nine ziko wapi? Cash book. Electricity. So unaandika pa nines. Electricity. 16 out of 100 times 32,000. Unakuja ngapi? Huh? 5120. The next date after nines. Kuna 12th nini ilifanyika? Kaluma. So 12th of Kaluma, isn't it? 16 out of 100 times 200. Huja ngapi? 32,000. 32,000. Next. Huh? 14. That is 14th of December. That is sales of export, isn't it? Export, we said they are zero rated. You remember? Export, we said they are zero rated, isn't it? And then next. Huh? Which date? 14th. Photocopying, isn't it? Photocopying, which is 16 out of 100 times 24,000. Udah ngapi? Huh? 38, 40. Are we together? Next. Date. 15th nini ilifanyika? Receipt from debtors. Is it sales or money received from debtors? Receipts from debtors, isn't it? So when you receive from debtors, si tunamaanisha hawa wanalipa, si ndio? Debtors ni wale watu walikuwa umeuzia kitambo. So ulikuwa usha account for VAT, si ndio? Ukiwauzia. It means you had accounted for VAT. You remember what we say tax point. Debtors are those people you have already supplied goods to. Now they are paying. It means when you supplied, is when you accounted for VAT. So you don't account for it again when they are paying again, isn't it? So that one you omit. Next. After 15th. 20th, ama? 20th kuna nini? Kuna sales. Sales how much? Ministry of Sports, eh? Ministry, ama? Ni ngapi 16? 16 out of 100 times 170,000. So inakuwa ngapi? 27,200. Sindio? Aya, next. Nini? 27 kuna nini? Si kuna 22nd, naona 22nd hapa. Mbona unaruka? 22nd, sindio? Refund to customers. We had been told refund to customers in the cash book related to the excess amount paid on cash. So we had cash sales. This cash sales. Where are the cash sales? This one, isn't it? So we refunded them, isn't it? So to a refund, so they paid the excess. So we are going to debit. This amount, there is a refund of how much? A refund of 176 out of this. So it means when we had included the VAT in the 176, they included the VAT on 176. So now we're going to return it back. It was excess, isn't it? It was excess, so there is no need. They charged excess on 176. So there was goods valued at 176, which are refund to customers who had bought in cash. So when I say refund to customers who had bought in cash. So the cash, this one, it means this 176 is included here. See, it is part of this amount here, isn't it? But you see now we are refund. So that one refund. That is which date? 22nd of December. So refund. So 16 out of 100 times 176,000. How much will that be? $28,160. Tumeelewana? Next is tumemaliza. Is it tarehe 27? What happened? Purchases. Salama. Anaitwa nani? Salama. 16 out of 100 times 180,000. So inakuja ngapi? Huh? 28,800. 28,800. So now we are through with those ones that. So tuende kwa number additional information number 1. We are through with the day books and the cash books. So that one, information number 1, there's at the customer was declared bankrupt. I'm going to show you how you're going to treat that one. And then note number 2, 10% of the purchases from Jawab Enterprises were returned by the company due to poor. That is, we say those are purchases returns. So we write here returns outwards, or purchases returns. Returns outwards. It's going to be 10%. 10% of 300,000. Is it 300,000 times 16 out of 100? So 10% were returned. 10% of the total purchases, which was 300,000. So return outward, we said we put the other side. Nakuja ngapi? So tunaweka hapa 4,800. So tumemalizana note number 2. Note number 3, credit notes amounting to 280,000 were issued to customers during the months. So that is return inwards. Credit note issued, isn't it? Credit note. You can receive credit note. When you receive credit note, it means when you issue credit notes, it means you are reducing the sales invoices. It is return inwards. When you issue invoices, when you issue credit notes to our customers, then it means you are reducing the invoices you had issued earlier on. So you record on this side. When the business issue credit notes, it means it's a reduction on sales that had been earlier invoiced. So how much is that? 16 out of 100 times 280,000. How much is that? Huh? 44,800. Are we together? And then number 4, we have already done number 4. Number 5, a purchase invoice of 220,000 from Dubai traders was omitted from the purchases day book. So there's omitted invoice. Omitted invoice. Omitted invoice, which was how much? 16 out of 100 from 220,000. How much would that be? 30? 35? You add there, you've omitted. So we are through, except now come out the bankruptcy. Tumeelewana? Is there any other thing apart from the Kamau? So here you come and add here, get the values here. Then you come here and add here. Can we add? Add this side, then you add this side. Hii ni ngapi? 44, 44, 48, 00. Na this side ngapi? 513, 920. Hivyo. So VAT VAT payable refundable is equals to output tax minus input tax. So output tax yetu ni ngapi? 444800. Then we less input tax. Input tax ni 513,920. Then we have bankruptcy. Kuna ule alikuwa declared bankrupt. Anaitwa nani? Having paid 400 for the goods purchase. So Kamau alikuwa amelipa ngapi? So itakuwa 16 out of 100 times. What was the value of goods sent to Kamau? So 520, si ndio? So itakuwa 520 minus 400. So itakuja ngapi? $19,200. So unapata ngapi? The 88, 300 and 88, 320. 88, 320. 88, 320. Aya, andika hiyo. Ama uliza swali. In brackets, ndio. So inamaanisha ni nini? Refundable, si ndio? Kama ni refundable ndo unaanza nayo next. Inaanza kama balance board down in the subsequent month, in the month of January. Sawa sawa? Iteko idea input balance board down. Hiyo si usha claim huko kwingine. Aya, tuandike hiyo. Nani ana swali? Swali ya VAT lazima ikuje. Hiyo ni lazima tu ujue. Na kwa na miaka ngapi? 12. Employment income 12. Business income 12. Alafu ma theories. Theories sasa unasoma. Sasa Yeah. Yani, so nisainie hapa phone hapa, si ndio? Alafu unaandika leo ni tarehe ngapi? Tarehe 1. So so we're going to do more questions on VAT in the coming classes. Hii ni yangu hii. Okay. Ama ni yako? Okay. Sawa, tutaendelea hivyo na VAT. Next week ndo tutafanya maswali mengi ya VAT na niwapatia assignment mingi, si ndio? Na tunaanza kudiscuss ile theories. Uanze kusoma mambo ya public finance, mambo ya administration of tax, ujue assessment nini, ujue return ni nini. Alafu kila mtu apite tax, ama? Yeah. So utaniletea hii, si ndio? Na uko na simu mingi sana, unatafuta pesa ya nje ama?